Hello everyone. This is the pre-market report video for today, 4th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, in the middle of US market, 2 p.m. Eastern time, US FOMC meeting minutes was released. So, I like to discuss first about it and then we can discuss about price info, macro and other technical stuff after that. As usual, I will attach the Fed meeting minutes PDF in the description below. If anyone fancy reading it, please have a go. Compared to all last 2 years previous FOMC meetings, in the last meeting, FOMC members as a whole, almost everyone convinced that the inflation is under control and all of them agreed that they were near the interest rate peak for this tightening cycle. However, unanimously, everyone also agreed for further interest rate increase if the incoming data shows higher inflation means. So that's the first point. Second, they revised down the inflation projection for end of 2024. Unfortunately, the minutes didn't provide specific numbers like how much of the percentage they revised down, etc. Third, some participants raised the concerns regarding the overly restrictive stance and its associated risk. Because of this, all of them agreed and stressed the point that moving forward, inflation and economy should be balanced. This is completely new. In comparison, in all the previous meetings in the last 15 to 16 meetings, always they pronounced that controlling the inflation risk is the first important thing. That in the last meeting was turned as need to balance with the economic activity. Finally, regarding balance sheet, quantitative tightening is going smoothly. They achieved what they intend to and all the participants agreed to continue the same pace. But there is one thing they stressed. Because of this quantitative tightening, there is a declining in use of overnight reverse repo facility, which simply sometimes Fed give money to US banks for operational purpose as a short-term loan kind of. So those were the quick summary of what's in the FOMC meeting minutes. There is nothing about that the Fed will start to cut the interest rate from this March onwards. Just for info, the Fed's next policy meeting is scheduled for Jan 30-31. Again, if anyone wants to read the summary, I posted in the YouTube channel community page. Please have a look. Overall, market will be much happier if they mentioned anything about March interest rate cut means, but that's not the case. However, on the positive side, there is no hawkish statement. Whatever they mentioned is completely dovish only. Now, coming back to last night, S&P 500 opened 0.5% negative, mainly due to profit booking and also after 15 days for the first time 10-year bond yield moved above 4%. From the macro side, the number of job openings in US for November month comes as just 8.8 million, which was less than the expectation and the October month value. In comparison, this is the fresh lowest value in the last 3 years. Then regarding manufacturing PMI for December month, no surprise, it's contraction only around 47. Only day before yesterday, S&P released roughly the same value. Now last night released one is another agency ISM. Either way, because of all those reasons, all three major index opened negative and continued to slide. However, then at 2 p.m. Eastern time, once the Fed meeting minutes released, it provided some support and trimmed some losses, but it didn't sustain. There was too much items that drags the market down. In the end, Dow Jones was down by 0.76%, S&P 500 was down by 0.8% and Nasdaq decreased 1.18%. In case of VIX, it increased another 6% yesterday and moved above 14 from around 13. A day before that, it was just 12.5. About tech stocks, for the second day in a row, Apple closed negative. Last night, market research company called Counterpoint released the report that iPhone worldwide market share was down in November month, which drags the Apple stocks by 1%. Then Tesla decreased around 3% due to the sales and competition in China. So stock wise, last night US market was disastrous. However, this positive Fed meeting minutes made the 10-year bond yield back down to 3.92% from above 4%, which is really a good thing. Regarding oil, again there was an escalation in Red Sea. In addition, Libya's biggest oil field was forced to shut down yesterday due to the protest, which in turn raises the supply concern and increased the oil price to over 3%. At the time of this video, WTI crude oil is trading around $73 per barrel and Brent crude oil is near $78.5 per barrel. Then coming to Indian areas in US market, More or less, it just followed the Indian market. I mean, both IT stocks, Infosys ADR and Wipro ADR closed negative, whereas banks mixed. ICICI Bank closed positive, whereas HDFC Bank closed negative. The only difference is Infosys is less negative and ICICI Bank is more positive than it closed in Indian market. And if we calculate the arbitrage, only Wipro is indicating the negative 1%, all others flat to positive. About Gift Nifty, as we discussed in yesterday's pre-market video, the premium with spot market dropped to just 60 points, which is indicating either consolidation or the downward momentum. Anyway, today early morning at 3:30 am Indian Standard Time, Gift Nifty closed at 21,603 mark. Based on the 60 points premium, despite the US market closed negative, it's indicating flat to positive opening. So those were the things happened yesterday from the dollar perspective. Let's discuss from Indian market perspective. I mean, at present, most of us know yesterday the entire Nifty fall was contributed by HDFC Bank, Reliance and IT stocks. Here, I didn't able to find the reason behind the HDFC Bank fall. If anybody knows, please let me know in the comment section. Since if it's this new RBI dividend payout ratio rule means, then it has to affect all the other banks as well. But it's not. Yesterday, the issue was only with HDFC Bank. Then regarding Reliance, yesterday Indian government released the details about who won the tender to produce oil in the offered 10 oil blocks, where the bidding was open July 2022 and closed in July 2023. Basically, it's the tender for who is going to take the oil out from the ground. On that, out of 10 blocks, 7 blocks won by ONGC, where Reliance won only 1 block, which is the huge setback for Reliance, and in turn it put some pressure on the Reliance stock price. Then regarding IT, as I said during our market time, this US 10-year bond yield increased and moved above 4%, which in turn crashed all the global market including US future market. As we know, 10-year bond yield is always against the tech stocks, so it does put some pressure on Indian IT stocks. In addition, Jefferies released the report that what they expect regarding quarterly results revenue from the Indian IT stocks, which is scheduled release next week. In that, they projected as the whole sector IT revenue expect to increase only 0.7 to 0.8% on quarter-on-quarter basis, which is the decade low value, and this is like way lesser. Usually, it will be anywhere between 3 to 5% increase. If required, please pause and have a look at the snip, like which IT company, how much percentage they expect their revenue to grow. Here, this report also puts additional pressure on IT stocks. So those were the things I like to highlight about yesterday's Nifty's price movement. About institution, both of them were net sellers. FII net sold for 670 crore rupees and DII net sold for 860 crore rupees. As a summary, US market closed in negative. However, after the Fed FOMC meeting minutes, the global momentum is improved, which is evident in Gift Nifty as it's indicating a flat to positive opening. However, not sure about the issue in HDFC Bank, and also till the time result release, we can't be sure about IT stocks price movement. Then, as per stock open interest, National Aluminium, L&T Mindtree, Escorts Kubota, Infosys, Metropolis, Birlasoft and Coforge got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Bajaj Auto, Crompton Greaves, Container Corporation of India, HAL, MRF and Vedanta got an increase in open interest with a positive price close, indicating the long build-up. Regarding the things to look out, before our market opening, China's service payment data is scheduled release. Then during our market time around 2:30 p.m, Germany, UK and whole Europe's service payment data is due. And in the aftermarket hours, Germany's consumer inflation, in case of US, crude oil inventories, weekly jobs data, private monthly payroll addition data and US service payment data are some of the items we need to keep an eye out today. Coming to technical, for the second day in a row, Nifty traded lower with a negative bias for throughout the day and closed near 21,500 mark. Thus, on the daily chart, it formed a long bearish candlestick pattern with a lower high and lower low formation for the second consecutive day. And also, it is at the edge below the 10-day exponential moving average 21,530, which was offering support for the past 2 months. Obviously, this is not a good sign. Hence, from the technical perspective, for the short-term trend, we can expect Nifty to continue to be negative. So now, on the way down, Nifty has reached the 38.2% Fibonacci retracement level 21,507, which is likely to act as a make or break level for the Nifty. Here, a decisive move below 21,500 level could intensify the selling. Then the next support is at 21,255, 20-day exponential moving average, breaching below and then it's 20,980. Immediate resistance is placed at 21,670. In case of Bank Nifty, it's not as bad as Nifty. It dropped only 55 points and it closed at the exact support point 47,700 20-day moving average. Hence, on the daily chart, it formed a bearish candle with a long lower shadow, indicating buying interest at lower level. However, the formation of lower highs and lower lows for the last fourth consecutive session, suggesting we can expect the selling pressure at higher levels. Thus, now it has to hold above 47,700 level to make up an up move towards 48,000 and then at 48,250 level. While if it's not holding means we could see some more weakness towards 47,500 and then 47,250 zones. Moving on, regarding the weekly options front, the maximum call option open interest was at 22,000 strike, followed by 21,600 to 21,700 strike, with new call option writing at 21,600 strike and then at 22,000 and 21,500. Thus, from the options data, 21,500 is an important level decided for Nifty's further direction, with immediate resistance at 21,600 to 21,700 levels. Whereas on the put side, the maximum open interest was at 21,500 strike, followed by 21,000 and 21,400, with new put option writing at 21,500 strike and then 21,400. Hence, the immediate support is at 21,400. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.